You have worked your entire life, paid your taxes, done everything right, and now you are finally retired and receiving your Australian age pension. You have earned it. But here is something that thousands of retirees discover too late. The moment you book that overseas holiday, a clock starts ticking. And if you do not know the rules, your pension payments could be reduced, suspended, or you could even end up with a Centrelink debt you never expected. So before you pack your bags and head off to Europe, Bali, the Philippines, or anywhere else in the world, stay right here, because in this video, we are going to walk through everything you need to know about the Australian age pension overseas travel rules as they stand in June 2026. Whether you are planning a short holiday or thinking about spending extended time abroad, this information could save you thousands of dollars. Let us start with the good news. You can keep the age pension while traveling overseas. The pension does not simply stop the moment you leave Australian soil. That is reassuring. However, the amount you receive and the supplements attached to your pension will depend very much on how long you are away. And this is where a lot of pensioners get caught out because they assume nothing will change. They assume that because they got their full payment before they left, they will keep getting it the whole time they are away. That is not always true. The key rule is this. If you leave Australia for less than 6 weeks, your age pension rate usually remains the same. This includes the pension supplement and the energy supplement, provided you were already receiving them before you left. So if you are going on a 5-week cruise, a month-long family visit to see the grandchildren overseas, or a 6-week holiday through Southeast Asia, you should be completely fine. Your payments continue as normal, and you do not need to stress. That 6-week window is genuinely generous and allows most standard holiday travel without any financial disruption at all. But here is where things get more complicated. After 6 weeks of overseas travel, the pension supplement is reduced to the base amount, the energy supplement ceases entirely, and your concession cards are canceled. This is a significant change that many pensioners simply do not expect. Your pensioner concession card, which gives you access to cheaper medicines through the PBS, reduced cost healthcare, and discounts on a range of services, that card stops being valid once you have been overseas for more than 6 weeks. So, if you are planning a long trip, you need to factor this in. The cost of medications and health services overseas without your concession entitlements can add up very quickly, and that is money coming directly out of your pocket. Now let us talk about what happens if you decide to stay overseas for an extended period, or even permanently. To receive the full pension while living overseas on a long-term basis, you must generally have 35 years of Australian residence during your working life. If you fall short of that threshold, your pension rate is calculated on a descending scale, meaning you will receive lower payments the fewer years of Australian residence you have accumulated. This is called the proportional rate, and it can make a significant difference to how much money you receive each fortnight if you decide to relocate abroad in retirement. So if you are thinking about making a permanent move to another country, or spending the majority of your time overseas, it is absolutely essential that you work out how many years of Australian residence you have and what that means for your ongoing payment rate. There is also something important to understand about the portability of your pension. The base rate of the age pension is generally portable, meaning it can be paid to you no matter where in the world you are living. However, as we have already discussed, certain supplements and add-ons are not portable. Some payments fall under the non-portability category, and they will stop once you have left the country. This includes things like rent assistance in most cases, and the full rate of the pension supplement after 6 weeks. The base pension itself continues, but you need to be very clear about the difference between your base pension and the total package of payments you currently receive. For many pensioners, those supplements and add-ons represent a meaningful portion of their fortnightly income. Now, one of the most important practical steps you need to take before you travel is notifying Centrelink. This is not optional. You still need to notify Centrelink of your travel plans because failure to do so could interrupt your payments, result in overpayments, or even cause a suspension of your pension. Centrelink does have systems that can cross-reference departure records, so do not assume you can simply leave and deal with it later. If they discover you have been overseas without notifying them, you could end up with a debt, which means they will start recovering overpaid amounts from your future payments. That is a very unpleasant situation to be in, especially when it is so easily avoided. You can notify Centrelink of your travel through your MyGov account by calling the Older Australians line on 132300 or by visiting a Services Australia service centre before you depart. When you call or log in to notify them, make sure you update your contact details, including your overseas address and phone number if possible. This helps Centrelink reach you if they have any questions about your circumstances while you are abroad. It also demonstrates that you are being transparent, which is always the right approach when dealing with government agencies and your entitlements. Another thing that catches people off guard is what happens to the assets test when they are overseas. When you go permanently or temporarily away, the assets test continues to apply. Your overseas assets, bank accounts, property, and investments are all still counted as part of your assets and income assessment. There is no overseas exemption. If your financial situation changes while you are abroad, you are still required to report those changes to Centrelink, just as you would if you were living in Australia. The rules do not take a holiday just because you do. Let us also talk about what happens when you come back to Australia. When you return, your full payment, including all supplements, should be restored, provided you have not made any changes to your residency status. But if you have been away for a long time and your circumstances have changed, there may be a reassessment required. In most straightforward cases, though, once you land back in Australia, your payments return to their standard rate from the date you arrive. One more thing worth flagging. If you are thinking about traveling back and forth between Australia and another country repeatedly, Centrelink looks at the total time you spend overseas, not just any single trip in isolation. Frequent travel that adds up to more than 6 weeks in a given period can trigger the same payment adjustments as a single long absence. So be mindful of the cumulative time you are spending outside Australia, not just the length of any individual trip. To summarize everything in this video, if you are going overseas for less than 6 weeks, your age pension payments generally stay the same, and you can travel with peace of mind. Once you exceed 6 weeks, your pension supplement drops to the base rate, your energy supplement stops, and your concession cards are cancelled. For long-term or permanent residents overseas, your pension is paid at a proportional rate based on your years of Australian residence, with the full rate generally requiring 35 years. You must notify Centrelink before you travel. Keep your contact details current, continue reporting any changes to your financial circumstances, and be aware that all standard assets and income rules continue to apply regardless of where you are in the world. The Australian Age Pension is one of the most important financial lifelines for Australian retirees, and knowing how to protect your entitlements when you travel is absolutely critical. Do not leave this to chance, and do not assume your neighbor's experience will be the same as yours, because individual circumstances vary. If you have a complicated situation, perhaps you were not born in Australia or you have lived overseas for part of your working life, speak to a financial advisor who specializes in retirement income or contact Services Australia directly to get personalized advice. If you found this video helpful, please give it a thumbs up and share it with a friend or family member who is retired or approaching retirement. It could make a real difference to their financial planning. Drop your questions in the comments below, and we will do our best to point you in the right direction. And make sure you subscribe so you do not miss our upcoming videos on age pension rates, the assets test, and how to maximize your entitlements in retirement. Until next time, stay informed and travel smart.